My name is Jim Weisel, Professor of Accountancy at Georgia Gwinnett College. In this video, we are going to take a look at a couple of financial statements, live financial statements rather than some of the examples in the textbook. And we're going to talk about these examples in the context of their shareholders' equity, just to give you an overview of what it is that we're looking at on the balance sheet. This is a little bit of a sort of a reverse strategy from what we typically do. Normally we start with the details and then move to the balance sheet disclosure. I think in this particular case it makes more sense for us to get a big picture of what the disclosures on shareholders' equity are going to be, and then we can work our way into the details of how those groups of accounts come into being, how they're valued, and how they are accounted. So in the previous video we described the basic organizational structure to shareholders' equity, that being paid-in capital, typically listed first. That represents the initial ownership interest in the company. Retained earnings or accumulated losses represents the accumulation of net income or losses in the company over time. Treasury stock occurs when a company goes out and purchases its own shares of stock. That is a reduction to shareholders' equity. Then we have the AOCI group of accounts, which can come about because of certain gains and losses that the FASB has determined have an impact on shareholders' equity, but should not run through the current year's income statement. And then non-controlling interest occurs when we have ownership interest in a subsidiary, but, or I should say a controlling interest in a subsidiary, but not a 100% ownership interest in that subsidiary. So the non-controlling interest represents what is not being held by us or owned by us. And that is essentially the basic structure to shareholders' equity. So let's take a look at a couple of financial statements. And where we are going to start, I'm going to start with IBM as one example. So I'm already at Finance Yahoo, and I'm just going to look up IBM. And normally we look at the 10Ks, the annual financial statements, but since we're really interested in a balance sheet, it might be interesting just to see what a 10Q looks like. The 10Q is the quarterly financial form that's required for filing with the SEC. It is different from the 10K in two respects. One is obviously it only covers the most recent quarter, the most recent 3-month period in the financial timeline of an organization. And it is a condensed form. It is not nearly as involved. The disclosures are not nearly as detailed in a 10Q as they are in a 10K, but they will be of sufficient detail to illustrate this shareholders' equity organizational structure. So I'm going to actually take a look at IBM's 10Q, and part of the reason why I chose IBM is we can see that their form was just filed the other day. So I'm going to click on the full filing here for the quarterly report, and it takes a second to load up here. Okay, and so now we can see the organizational structure, certainly shorter than the 10K, and there's also not the standard items 1 through 8 that we would typically expect. And so it might take a little bit of hunting around to get the full balance sheet that we're interested in. It could be here in the consolidated financial statements, or it could be down here in what is also being called financial statements. Typically the first ones listed, not always, but typically the first ones listed are really shortened versions of the real balance sheet and income statement. So I'm going to skip down here, and we can get IBM's balance sheet, and I'm going to zoom in here a little bit, so hopefully we can make this a little bit clearer for you. So first of all, this is the financial position, or the balance sheet for IBM, and we have comparative dates here. Notice that this is their fiscal year end last year, December 31st, 2012, and this is where they are as of September 30th, 2013. So that would be the third quarter of the year. Now remember, the balance sheet is a rolling accumulation of assets, liabilities, and shareholders' equity. And so we can take a balance sheet snapshot on any given day of the year that we want. And in this particular case, their quarter year end is September 30th. All right, so we have all the typical kinds of assets, and then we've got liabilities, and notice here we have total equity. And all we have here is what our total equity is, $3.6 billion. There's no detail in here at all. So this is clearly not the balance sheet that I really want to take a look at. So I'm going to back out of this and see if I can find the other balance sheet item. Let's click here. And this looks a little bit better. So we've got liabilities. There were two links to the balance sheet. One page goes to the asset side. This particular link that I just selected now goes to liabilities and shareholders' equity. So here's our liabilities as we would normally expect to see. And where I really want to focus the discussion here is shareholders' equity. So IBM stockholders' equity or shareholders' equity. Before we get into the details here, just kind of look at the headings. So we have common stock, right? The paid-in capital. We have retained earnings. We have treasury stock. We have some AOCI, and we also have non-controlling interest here. So we've got a variety of the typical kinds of accounts that we would expect to see. So let's start with the common stock or the paid-in capital group of accounts. And we can see here that IBM has actually a fairly simple capital structure. They only have one class of stock, and that's called common stock. And that's it. They don't have preferred stock. They don't have Class A, B, and C common stock. They don't have any hybrid securities and all those complicated things. IBM is a traditional old line company, been around for a long time. And so their capital structure is very simple, very straightforward. We can also see that there are certain details that are presented on the face of the balance sheet. This is somewhat unusual. It doesn't happen very often in financial statement disclosure where we get this level of detail. Certain elements of this detail is mandatory on shareholders' equity. So it'd be common or expected across companies, but this level of detail is not found in other parts of the balance sheet or the income statement. First of all, we do need to inform our shareholders how many shares of stock are authorized and how many are actually issued. So when a corporation forms or is incorporated in a state, for example, the other day we saw that I think 3M was incorporated in Delaware, they are going to be authorized to issue some number of shares of common stock. And we can see that IBM is authorized to issue 4,687,500,000 shares of common stock. And then we also need to identify how many shares are actually issued, how many shares have actually been purchased by investors over time. And we can see that because we have comparative balance sheets, we have to identify the number of shares that were issued as of the end of 2012, and right now, as of the end of September, how many shares are issued. So at the end of September 2013, there are 2,205,000,000 some odd shares that are issued. So about half of the common stock that the company is authorized to issue has actually been issued. And that would be fairly common to see. A company is not going to be issuing all the common stock or all the shares of stock immediately upon their formation. They want to be able to raise capital periodically throughout their lifespan. And so it would be very common to see arguably very large numbers of shares authorized, but substantially less than that actually issued. That gives them room to grow without having to refile corporate structure documents, without having to file amendments to their form of organization and so on. So in any case, we've got some common stock outstanding. It has what's known as a par value of 20 cents per share. The concept of par value is really kind of an arcane concept, and increasingly firms are jettisoning that where they can. That's really a holdover from some old, typically state laws that require some sort of minimum legal capital for a business to be formed. But we're not going to really worry too much about that. What we're really interested in is that investors have up to this point invested $51 million in shareholders' equity for IBM. So that's the investor's contribution to IBM. The next element of IBM is retained earnings. And we can see that retained earnings here is a positive almost $125 million. That's really good. It is positive, and it's a fairly large number. Also of note is that it is growing. So at the end of last year, it was $117 million. Now it's $124 million. Yes, or $124 billion, I should say. Everything here is in millions. The next component to shareholders' equity is Treasury Stock. And we can see that there are almost or just over 1 million shares being held in Treasury. Now what that means is we have to be very careful about how we interpret this. So over the history of the company, IBM has issued, as of September, 2.2 million shares of stock. However, it has also, over time, been going into the market and repurchasing its own shares of stock. In fact, it has repurchased 1,120 million shares. In other words, out of the 2.2 billion shares that have been issued, only about half of that is actually outstanding. So we have to be careful. There's shares authorized, shares issued, and shares outstanding. Authorized is just that, what we are authorized to issue under our state incorporation rules. Issued means that it has been purchased at some point by investors. Outstanding means that it is currently held by investors. And so IBM has gone into the market over time and essentially repurchased almost half of its common stock. If we wanted to know how many shares are actually outstanding, how many shares are being traded in the market today, we'd have to take this $2.2 billion and subtract the 2.2 billion shares and subtract the 1.1 billion shares that is being held in Treasury. And so that is a rather large negative or debit balance account to shareholders' equity. We'll get again into more details later on. Right now I'm just trying to get you to look at sort of the big picture of what happens in shareholders' equity. The last item, or the next item that's shown in shareholders' equity here, is this AOCI group of accounts, accumulated other comprehensive income and losses. And in this particular case for IBM, we in fact do have accumulated losses, $25 billion of accumulated losses there, having a negative impact on shareholders' equity. So the net shareholders' equity here is $20 billion. And then we do have this non-controlling interest. So obviously IBM has ownership interest, in fact majority ownership interest, in a number of subsidiaries. But there are apparently some subsidiaries for which they do not possess 100% ownership. And so the $131 million represents the non-controlling interests of subsidiaries that are consolidated on IBM's financial statements. And so our total equity here for IBM is a net $20 billion. And that gets added to liabilities. And if we saw the asset side of the balance sheet, we would see that we've got almost $98 billion in liabilities, $20 billion in equity. That's $117.8 billion in liabilities and shareholders' equity. And that's what our assets are going to add up to, $118 billion. From here, we could begin to do some analysis. For example, we can see what our debt to asset ratio is, or our equity to asset ratio is, and those sorts of things. But right now, as I said, just wanted to give you an overview of what's happening on IBM's financial statements, specifically related to its shareholders' equity.